Good turnaround Tuesday, Warriors. Hope everyone's doing okay. Good morning, good day, good evening, depending upon where you are on the globe. So, we have some pressure in stock indexes today, and it reminds me of what I was saying yesterday and what I've been saying that I've learned over the years, and you may want to write it down. So a lot of the bears were waiting for 30, 40, 30, 50 to get short S&Ps. I'm not saying it won't happen, but what I've noticed is when there's unanimity for one scenario and a number that people have been talking about for several weeks, maybe even months. I remember interviewing Garrett Patton and a lot of people talking about 30-50, 30-50. I think Andre has 30-50. I'm not saying that it may not happen, but what happens is at times, and more than not, is that when everyone's looking for one scenario, one number, it either never achieves it, which is the way it looks right now, and longs are probably looking to get bailed by the Fed, and what if they disappoint with a quarter and the market's not happy about it? You're not going to see 30, 40, 30, 50. So that's something to keep in mind, that we're already setting up a little bit of a reversal week. A 2-week reversal takes place at 30, 10, 40. So we're already under it, but you know, we have the Fed. You could throw your charts away for a while tomorrow. Blake made a great point yesterday about the Nikkei, and what a great short that was. If anyone pulled the trigger, where are you, Nikkei? I think I passed you up. So Nikkei and the other global bourses are much weaker. And with the Nikkei going lower, Blake was talking about the yen. Now, US dollar yen is not as weak as the Nikkei, if I could find it. And Nikkei looks like it can take out the lows of the move that it had. Here we are, back at the beginning of the year. Whereas the S&Ps may or may not. This low could be vulnerable. Pretty ugly action up here. So, you know, we have a couple lower highs. Here's one. Here's a few more. This looks vulnerable to me. Blake showed the DAX. The DAX is getting hammered. Okay. So I think this is a DAX. Anyway, so when we look at this, yeah, on a weekly basis, not even close to the highs that we had at the beginning of the year. So to me, it looks like global stock markets are in for a correction, and I guess that people are going to stay long. They're going to think the Fed's going to bail them, and they may or they may not. Leopold, that's a good point. Actually, the gold chart looks better to me. Hello, Claudia, Ite. Taking a look at the gold, and it's going to be Blake and I today. So when I look at the gold, the scenario, and I'm going to talk about the yuan too. Everyone's looking to buy it back here at 1400. Sorry, expect gold to go higher. Okay, that could disappoint too, but this is still a pretty decent looking chart. You know, like I pointed out yesterday, we only have one divergence up here on the daily. See this right here, this high? And I was talking about if the gold does rally to new highs. So a lot of people are looking for 1480. If the gold rallies to new highs, you're going to have, I believe, what Ellioticians call an ending diagonal. Same scenario in silver. Though silver has a better relative strength look to it, but shorter term, silver moving sideways for a while, we could get a third here, and this would be your second divergence on a shorter time frame, maybe up at 1670, 1680. So I will look to short the metals after the Fed if it goes up. So the metals actually look like they could rally on this, but the S&Ps, I don't know, we'll see what happens. Want to talk about the yuan, okay, because the yuan when you look at it on a 1 hour, this was pretty dramatic, this rally that we had here. And when you look at the daily, it looks okay. And if you look at the weekly, it looks better. If we start penetrating 695, I know a lot of people are talking about 7 1/4 is very likely. It would be bullish for gold if this came off one more time, and for risk. But if we start cracking this line here, everyone remember, I don't know, a few years ago, the first devaluation that we had in the yuan, the Dow opened 1,000 lower one day. So we start cracking this, and you're going to have some problems in the market. And 7 1/4, I don't think the market's going to like. And if you take it all the way down to here, it's almost 70. Could give you 760. So here's a real macro look at the yuan. Okay, so we penetrate these levels. They saved the bell here, but if you notice, going back to 2018, the pullback was dramatic. So maybe this means trade with China is still uncertain. And if we hear any more things about the uncertainty continuing, breakout in the yuan, I think, is going to be upsetting for risk. Everyone with me? You couldn't see my metals charts? Must be you, Kevin. So here I'm putting up the gold monthly. Can you see it? So you can see, why are people talking 1480? All right, because as powerful as its gold move has been, if you take it from the high in 2011 to the low here, we're not even 50% back yet, okay? So gold bears will say, you know what, this is a bear market rally and we're going to get another big decline. So we'll see what happens up here. I hope you could see it now. Can you? And this would even be a bigger surprise, as if the long end of the market, which is struggling for higher yields. We'll see how this is really going to be important, how the market reacts to the Fed with rates. Oh, thank you, Joe. So this is going to be pretty key here. Okay, Kevin raised his hand. 1450, a new high, Ite. Okay, from your lips. Okay. Someone else raised their hand. I have chat up here. It's a fib level. Okay. That's not a new high, though, is it? At 1450. Because we were there. Okay. We were over 1450. So I'd like to see new highs and the RSI stay beneath 70. I believe it'll do that on the daily. I'm not sure about some of the shorter term stuff here. So that's my look on, the day before the Fed. And, if you don't have a lead on anything going into tomorrow, I would be pretty careful. I'm still trying to be patient for an Aussie Kiwi buy, which I'm looking for this. One more shot down to the 78.6 level, which could happen. So right around the 72 level, I'm going to attempt it with stops under the low of the move. Maybe give it a little tolerance by 20 pips or so. So risking over 100 pips to see if we could get one more of these from here. And the Dixie, it's right up here at some major resistance. We are diverging on some different time frames. It's really overdone. I think I'd rather go with yen shorts, because when you think about how strong the dollar has been, just look at this rally here. See this? And then compare it to what the yen has done. Fairly similar. So if the dollar is going to come off, my preferred short for the dollar coming off is not a long in euro or definitely not a long in pound. And I don't think the dollar's done, but it would probably be the yen. I know Paulie was looking for something like this. Although the yen really to turn negative has to get back through this resistance that it broke with authority yesterday. So maybe we get 1, 2. Paulie's looking for shorts up here. He'll be with us tomorrow. And that's a possibility. So something else that you may want to keep your eyes on, crude. To me, this looks like just potential continuation formation and should have trouble around this 58 level. I don't think this is the bottom in crude. Still think we get lower numbers. So after this high here, we got slammed. 58 should be a decent level. I think we're going to take out this 50 level. Okay, so crude could be a shorting opportunity. If you get a little bit of risk on too, I don't think that's heading up. And copper just keeps on eroding. So I'm taking a little bit more time because it's Blake and I today. I could field some questions. Bitcoin, you know, crypto, had some people on talking about that the government eventually was going to, you know, not be happy about this. And the IRS found 10,000 people's names that, you know, may not have filed capital gains reports or whatever. They're starting to make it a little more tough. But here again is a descending triangle and breaks under this 9,100 level is going to make it pretty vulnerable for something like this. So in this environment, it's hard for me to want to, you know, go into all the tape bombs that might start happening with crypto. So be careful out there. Bitcoin's at support level. Aussie, okay. I actually think Aussie could still try 67. But Aussie's really going to be one of the preferred longs, in my view, when the dollar turns. So I'm looking for one more low down here. So we're eating into this, the big flash crash. There's the monthly. Okay, so this was a flash crash. I'm figuring 67. I don't think we're going here. I'd be looking for buys, but I want to see one more low. I want to see this low taken out under 68.30. But this is something I'll be looking for an accumulation of longs in this market, in the Aussie, when I think the dollar is close to turning. Okay. I'm going to save crosses. I don't do much with pound CAD, but I'm going to save some of those crosses for Blake. And Blake, good instinct on Nikkei and yen yesterday. Did you short the yen on that idea?
Yeah, I mean, I was short dollar yen yesterday. I added it. I added a little bit yesterday, and you know, I didn't have the best cost average, and I actually just closed my short just literally about 5 minutes ago. So, and I'll show you over here.
Okay. Do you think, like, you know, I think this is kind of surprising to people that the S&Ps are down 13 handles or so the day before the Fed. You know, it's month end. Amanda pointed out on our Skype, you know, that could be part of it. But I would say that longs looking for a big payday from the Fed might have a little trepidation here looking at the action today. What do you think?
Well, you know, today, there was some, you know, comments from Trump said that there's a problem with China. They keep changing up the deal, and
okay.
that's why.
Okay, so that's why the yuan looks poised to break through that resistance.
Yeah, and so we had the yuan does look like it's poised to break through this resistance because you know China will continue to keep their currency week, especially if this trade war continues. And the dollar yen, that's why it slumped earlier. That's why we were we were trading in the 60s, and then we slumped all the way down to the 40s. And I took it off. Like I said, I took it off the table, and we once we start trading into new hourly lows here, then I'm going to revisit the short side of this. Then I'll start selling rallies. And like I said, I had a short yesterday from around the 108, like 57, but I added a little bit yesterday, and so my cost average wasn't too bad. It was just wasn't. I didn't cherry pick the top here, where I should have just sold the false breakout originally, and I didn't. So I didn't have a great cost average. So I mean, I made a little bit of money over the last 2 days in the short dollar yen trade, but it wasn't anything to write home about. But I do think that we are vulnerable. But I am very cognizant of what gold's doing, and I agree with you. This gold for a possible 3 drive, that you had been talking about the last couple of days, is possible move up to up here towards 1450, 1460 could create that 3 drive. I'm aware of that, and so because of that, you got to be careful with the dollar yen, because gold, as it goes up, the dollar yen goes down typically. Right. And then vice versa. So, and plus, you got the Fed tomorrow. So for me, it's like, okay, having dollar yen or euro dollar exposure going into tomorrow is going to be a little bit riskier. I've got some dollar Mexican peso exposure, but the dollar Mexican peso tends to be more of a currency pair that is going to move on risk appetite or risk aversion versus the Fed. We could still get a Fed move or a dollar move in the dollar Mexican peso, but I'm not as worried about it as I would be in the euro or the yen. So
any damage done on your charts in the S&P or Dow? The Dow didn't make a new high with the S&Ps. Yeah.
Well, I mean, that's a great question. First of all, as far as any damage done with the S&P, no, there isn't. We're still making higher lows. And right. Yeah. I mean, there's definitely good resistance up here. And I do think that this, you can see it. I'll just pull up the daily chart. This trend line resistance, some people are looking at this as a like a megaphone pattern, something like that. Which I mean, it could be. I do acknowledge the fact that this upper trend line resistance is significant, but unless we break back below this 2990 level support, or really below 2960, you can't get too excited about any downside in equities at this point. This is just all consolidation, but I do feel that we are really struggling with this trend line up here. So you got to be careful with longs.
Yeah. Do you have an opinion? I brought up, having been around the markets for a few years, that when everyone's looking for one scenario or one number, it either doesn't achieve it or it's meaningless when it gets there. Any comment on that?
Yeah, I think that was a great observation, Dale, and this is where your experience of trading for 400 and some odd years. I'm just kidding, maybe 40 years.
I did a wheat trade with Joseph in Egypt.
but trade, being around the market so long, I think you obviously pick up on certain things, and this is one of those things that's a great takeaway for anybody who's listening in, especially those people that haven't been trading for a long period of time. Yeah, if everybody's targeting one area, and it's pretty apparent. And that's the one thing that's beautiful about Twitter, in my opinion, is you can see a lot of people targeting the same spot. And typically when everybody's targeting one level, and I do this with bank analysis, because I get so many bank analysis reports throughout the course of the day. If everybody's targeting a certain level, a lot of times we fall short of it. But
notice it.
Yeah, and I think that's a great observation, and I believe that actually with fib levels too. Especially some of these key fibs like a 618 or a 161% extension, or if we have a flag pattern, or a lot of my chart patterns now, I try to target before the target. I try to get out before the targets are met, because sometimes the targets aren't even, they aren't met, generally speaking. So, and they just fall short of that final stretch. So I think that's a great observation on your point. And this is where, like I said, your experience speaks volumes. So people that are listening in right now should really take heed to some of the things that you're saying.
Oh,
yeah, and that's what makes you the hostess with the mostest around here, Dale. Is but you know not only a lot of trading techniques and things that you've picked up over the years, but what's also very valuable about your knowledge base is you tap into so many, you know, great analysts and traders throughout the course of the week and throughout your years, that you pick up on a lot of cool tidbits like that, right?
Yeah.
Well, so what I'd like to do today, since Steve and Stelios are colleagues from Greece, it is August, and it's almost August, but typically this time of year, most Europeans are wrapping up their summer vacations. Our team is no different. Both of them happen to be on vacation this week in different parts of Greece. Steve is up in the Peloponnese, which is in the northern part of Greece, which some of my favorite places in Greece are not on the islands; they're in the Peloponnese. And Stelios, on the other hand, is on an island somewhere in the Cyclades. So because of that, it's just us two today. Paulie was going to jump in today, but we're going to have him come in tomorrow, as what we're going to do this morning is something for those of you that are longtime listeners who used to listen in to the Morning Edge back in the day. We're going to do the old bias chart today, and we're going to go through all the majors and put up key support and resistance levels. Now, if you've never done this with me before, this is something that a lot of traders love to do, and had carried on the process of doing this over the course of ever since I stopped broadcasting on the Morning Edge a couple years back. But Paul Franco, every day on the European crossover, does his own bias chart for the majors and a couple of key indexes. So remember, if you're a ForexAnalytix subscriber, you can listen in to his webinar. That's the European crossover, which is 3 or 4 hours ago, and it's something this is an important process that I like to go through on a daily basis. As you notice here with ForexAnalytix, these support and resistance levels, those don't automatically appear. Those are not computer generated numbers. These numbers are posted by myself and the rest of the team as we go through the majors, and we put up support and resistance levels based on fibs, trend lines, extensions, Elliott wave counts, you name it. Those levels that we're identifying are levels of support and resistance that we found to be very important based on our analysis process. So, a lot of traders that I talk to, they love the support and resistance function of ForexAnalytix, because whenever these support and resistance levels are breached and you see them turn red, or if they turn green when a resistance level is hit, it'll send out an alert to your desktop, your phone. It'll give you a push notification on your mobile app if you have them turned on, or you'll get emails to your desktop, however you decide to adjust your settings for all of your notifications. So if you're over here, you can say, oh, I want to get my, all my notifications a certain way. This ForexAnalytix allows you to completely customize it to meet your needs. So, anyway, the thing that we're going to do today is we're going to go through the majors, so you guys can get a bit of an idea of how I go through my process and look at each one of these major currencies and identify where those support and resistance levels should be. So let's start off with the euro dollar today. Now, as you guys know, the euro, German inflation data just came out a little bit ago, and I think that's what actually pushed up the German CPI came out, and that pushed the euro up a little bit as we had we got data coming out in just a couple minutes too, but we'll get to that here in a second. That's what pushed up euro into the highs earlier. Now, what you'll notice here is the euro has really thwarted off the 111 support. You know, a lot of people were thinking that we're going to break 111, and I don't think that if you're long the euro, you're out of the woods yet. Obviously, tomorrow's FOMC on a more hawkish, more hawkish Fed, the risk of the euro dollar breaking through this support, I think, is high. So, you know, what we have to note this morning is the 111 key support level for the euro. That's obviously key. So what I like to do is 111. You know, that's key. And then, but we might have some near-term support in the euro right now, which what I would identify as the overnight lows, which is 111.32. So 111.30 is going to be like a secondary support on the euro dollar. Here, let me go 111.30 like this. Okay. All right. So 111, 111.30, those are going to be support. Resistance levels today. Now, the resistance in this is a really important resistance, in my opinion, is 111.82. We spiked above there just briefly, following that. This is the move following the ECB last week. So what I'm going to write down is 111.80. And then, you know, we have resistance all the way to 112. And I think this is the range that obviously is in play between now and tomorrow's FOMC. So as you can see, 111.12. And what I'm going to put down as a bias is in a range. We are in a range. Now, going into tomorrow, that is probably going to switch to bullish or bearish based on, you know, if we break the upper end or the lower end of this range. But this range is going to be very important for going into tomorrow's FOMC. Now let's stop for a moment and let's see what this data. Oh, actually, we still have about 2 minutes. So we got 2 minutes to go over the cable. So let's talk about the cable. So if you're a ForexAnalytix subscriber and you're reading the analysis last night, here's the daily chart from last night. You can see as we have channel support that comes in around 121. End of day analysis yesterday, the cable closed near the lows and a move to the 121 level, 127% extension seems possible. DSI reading is at 7. That means it was very, is extreme bearish. So there's an increased risk of a bounce near term. And the cable last night in Asia, you can see we started selling off through 122. We went all the way to 121.18. So we came really, and this is what Dale said. Dale, this is exactly to your point earlier. Look, this is channel support, 127% extension of this last range. Everybody is probably targeting 121. And what did we do last night? We came to 121.18. It fell short of actually hitting that level. But if I was going to trade counter trend in the cable overnight, which I was asleep, but let's say I wouldn't have been putting in my order at 121. I would have probably put in my order at 121, and a quarter, and probably got triggered on a counter trend long. That I think is a risk when these key levels all coincide around the same area. You're probably going to stop short of that because you're gonna everybody's probably targeting that. Now, real quick, let's go over to the data. We have the PCE data that's coming out. So we got PCE, personal income spending. Data will be out in just a minute. Here we go. Personal income is in line. PCE is in line. Yeah, consumption's in line too. So spending's in line. Everything's in line. Nothing really moving the needle here. Revisions got lowered on personal income. Let me see with PCE. Revised. Yeah, it looks like lower revisions. They're really personal spending, lower revision, real personal spending, excuse me. PCE got the year over year got revised lower. Same with month over month. So yeah, that's what's weakening the dollar at this moment. So excuse me 1 second. Okay. I just had to pick up a little bit more of my dollar Mexican peso on that dip, because I'm playing it off of this support. If you guys don't know what I'm doing here, I'm playing this lower, longer term trend line that comes in around the 1895 level. So as we dip down towards 1902, I'm always happy to pick it up down here, and hopefully I'll be spinning out of it around the 1920, 1930 level a little bit later today, but we'll see. Anyway, let's go back into the cable, as it looks like the reaction is pretty non-existent at this moment. So obviously support right now for the pound is 121, and you gotta imagine, and I'm gonna write this down, 121. This is going to be pretty key support, and that's why I'm going to put an asterisk there. Any dip in the cable now down to 121 intraday is probably going to be very well supported, especially if we get a new low. So if we get a new low from here, okay, you have to imagine that if we get a new low, we're still going to be oversold, but we're probably going to be a divergent. It's probably going to set up for a divergent move higher. So what I'm hoping for in the cable, and we may get it, is a dip to new lows. And if it hits new lows, I might actually try a counter trend long from this at this stage. That's up for debate, seeing how the market responds should we get down there. But that's something that I'm thinking about, at least right now. Now the question is, how far can we rally on any type of bounce? So what I'll do is I'll take this last move and I'll say, okay, well, 38% retracement of this last move is 122.76. Also comes in near that hourly high, or that 4 hour, or is that an hourly? That's a 4 hour, that 4 hour high right around here. So I'm going to say 122.75, pretty minor resistance, but it's possible that we get up there. Obviously we are in a bearish trend with the cable, no doubt in my mind about that. Let's go take a look at the Aussie. Okay. So here's the Aussie. Aussie, the problem with, if you're a bull in the Aussie, the problem with the Aussie right now is that we have made a lower low, and I think you had to try to avoid that. Wow, look at this peso just spiked right back up. Hold on really quick. Glad I picked up a little bit more down there. Wait, hold on. Looks like Trump's speaking again. So, all right. Anyway, let's go back over to the Aussie. So the Aussie has it's come off, and we're heading into support. And you can see the 127% extension of this last move higher takes us right to, this is a support zone. You see how I drew that there? You have the lows here, the lows over here. Yeah. So the lower end of that support zone comes, or the upper end of that support zone comes right at the 127% extension. So I think the 68, 67 level, and I'll write 68, 65, that's going to be pretty key support for today. 68, 65. It's going to be pretty key support for today. Now, resistance on any rally. Now you got to imagine, we have been under pressure, and this Previous support should act as current resistance. You can see that little spike right up here, and that comes in at 69.14, 69.16. So I'm going to write down 69.15 as being resistance today. And frankly, I know we've been coming down quite a bit over the last couple of days, but all in all, we're kind of range bound. If you look at the last, month worth of moves here in the Aussie, I mean, we're pretty range bound. So that's why I don't want to put it that it's bearish. I know we just came off quite a bit over the last few days, but just because we came off quite a bit over the last few days doesn't mean that it's completely bearish. You take the pound, and the pound's obviously in a very bearish trend. The Aussie, a little bit of a different picture here. I think we're more range bound than anything. Let's take a look at the Kiwi. So the Kiwi, very similar situation to the Aussie. Failed at resistance up here. I don't think, obviously today, we're not going to go anywhere near that. But what we have to identify is we're getting close to a 618 retracement of this entire move up. Okay, that's going to come in at 66.03. So I'll write down, just to round it out, 66 cents is going to be pretty key important. Whenever we come close to a 618 retracement, I want to be very cognizant of, of that support coming in. Now, resistance for right now, you can see all these spike ups, and this is actually a previous trend line and a broken previous trend line. Okay, so that means that every move up to the 66.40 should probably see some resistance today. It's minor, but it is resistance. I'm going to put us in a range. Okay, let's take a look at the Canadian really quick. So the dollar Canadian, the dollar Canadian is it's a big hot mess, in my opinion. We had this descending wedge. We came out of it. We hit the 38% retracement, which, coming out of a descending wedge, 38% retracement is like my minimum expectation. But we've struggled the last couple of days, and we have not been able to get above here. And I doubt that we're going to get above this spike high ahead of the FOMC. Unless crude oil takes a $4 nosedive today, I doubt we're going to be, testing, if not breaking, these levels. So 132 is going to be support resistance right now. And I think support, you have to look right through here. So you can go, well, this is, support. Let's clone that. Oh, no, that's not what I want to do. Excuse me. I wanted to clone this. So 132 here is resistance. 131.15 is support. And like most of these other pairs, we are in a range as well. Hold on really quick. I'm just taking a real quick look around, seeing if there's anything moving.
What a great idea for people to construct their own. It doesn't have to be exactly, but just to have your numbers every day, to have them in front of you, because we can't remember all these areas.
That's
mentally.
That's the important thing about, well, in my opinion, okay, having your own bias chart or idea where key support and resistance levels is so important, because your charts are not going to be my charts, and we're not going to see things eye to eye in the markets ever. But when you can take, your own support and resistance levels and match them up to what like we have here, and you can go, oh, well, look, the ForexAnalytix team has all these support and resistance levels written down, and I'm coming in around those same areas. Or if there's a support or resistance area that maybe you didn't see that we have written there, you can go, okay, I wonder where they're getting that support and resistance level from, and then you can figure that out and try to understand where the significance of these levels are. But they
could even see confluence. They come up with their own, and they see that the team has that level. That should give them more conviction about that level being significant.
Sure, and I believe that, and and I think a lot of people are going to use some moving averages to also garner these support and resistance levels as well, which is totally fine. But
Yeah,
it's important that you know where your key levels are on the pairs or the instruments that you're trading,
every day.
and every day. And a lot of people think that trading is just oh, I sit down at my desk and boom, I'm off,
Yeah.
I'm going.
You can't be lazy, Blake, you know?
No, I spend hours every morning before I even. There are times that I'll click the button just because a currency pair is near a support or resistance level that I'd been eyeballing for days, and it finally got there, and it went there overnight. Excuse me. Or is currently respecting it, and it might cue me in to get into a trade. But most times I'm doing analysis for hours on end in the morning, just getting ready for the day, going through this process. So hopefully going through this type of process helps you out, and you don't have to do it the exact same way I do it. I'm just giving you an example of how I do it, and hopefully you can
Seeing something
take
in
something from it.
print, whether you write it down or you have it in print, and writing is even more powerful according to NLP, neuro linguistic programming, that it has more impact on your memory because you've written it down than just glanced at something.
That's very, very true. That's why, you're always in any type of learning environment, you're always urged to take notes
And
to
journal.
and journal. Yeah,
Did you use the journal, Blake?
I still
Early in
journal.
your, you still use, okay.
Yeah, I actually started journaling about. Uh, I didn't journal for a long time, but when the market got more challenging over the last year and a half, I started journaling because what journaling does for me it keeps me more disciplined.
Yeah.
So every time I take a trade, I'm like, okay, I got to write down why I just got into that trade. I do that, and I have been doing it since this market has become more of a low volatility environment. It's keeping me more disciplined. But I went several years, probably a good decade, without journaling. Um, and with volatility, if it comes back, which we're all hoping it does, I probably won't journal as much as I do, because I'll be acting a little bit more quicker. But that's based on my experience level too.
Yeah.
But anybody who wants to be more disciplined in their trading, try journaling, because that's gonna force you to be more disciplined. All right,
Yeah.
let's wrap up some of these majors really quick, and then we'll answer some questions. And if you have any questions about anything that I'm doing, please let me know. All right, so here's a 4-hour of the Swissy. I think the Swissies got in a little bit of a quagmire, because we're going to have some support on this broken trend line, and you can see this previous high. So that's going to offer us support at 98.72. Resistance is at 99, 50. And I think we have to be respectful of this range currently. I don't think there's anything really to do here in the Swissy. So the support is 98. I'm just going to write 98.75, and then resistance is 99.50. And one of the things I've been meaning to mention this to you guys in the mornings, and I probably and I've been forgetting about it. But I do, when I'm doing my support and resistance levels on a lot of these pairs, especially the Swissy, what I realize about the Swissy is very respectful of the 50 cent and round numbers. And I think a lot of that has to do with intervention efforts from the Swiss National Bank. Swiss National Bank may like to hold the Swissy at 99.50 or 99, a big figure, or 98.50. That happens a lot in the Swissy specifically. And do yourself a favor sometime, and just take a look at where all these support and resistance levels that come in. They come in right around the round numbers, or half cent, even quarter figures. 99.50, 98, 98.50 right through here, 98.50, 99. 99, 99. You'll notice that happens quite a bit. And like I said, I think as the Swissies, it is intervention efforts from the dollar, from the Swiss National Bank, that will try to keep the Swissy near certain levels. So just some food for thought. Okay, let me remove this. Let's go into the next pair. Let's talk about the Canadian. I think the Canadian will be next on our list. Oh no, we already talked about it. Let's go to the dollar yen. All right, so the dollar yen. Like I said, I just covered my short at 47. And this is what I'm really worried about right now, is the dollar yen is not creating yet. It's not creating lower lows. And so, if we break 108.40, that'll signal to me that now I can start selling rallies. Well, I could be more. Actually, let me take that back. I could be more aggressive selling rallies, because right now I'm trading about half size in my positions in the dollar yen, because I'm just not real confident that we're actually turning lower. But even though stocks are weaker, I didn't see, the dollar yen hasn't completely rolled over yet. But I think if we break below 108.40, that might change the picture a little bit. 109 is resistance, and you can see all this. This is the resistance zone that you have drawn out here, right? And that
looks
actually
like a neckline at 109.
Yeah, I had to actually mark this up as a inverted head and shoulder pattern back here.
Okay.
And because whoops, that I did not want to do. Okay. But when we dropped through that right shoulder, I just kind of, dismissed the idea that this might be an inverted head and shoulder pattern. But I do.
Maybe that low that we broke through that negated the other head and shoulders is the head now. And we rallied back to 109, and that's a neckline. And now we get a right shoulder and then go.
It could be. And I do think that 109 is very significant. And I think that one of the reasons why the 109 level is so significant, if you look at this fib right here, see this one right here? All right. Notice how the 38% retracement comes in at 108.92, or, right around basically 109. It's very significant in my view. So if we get above 109, especially following tomorrow, on a maybe more hawkish FOMC, we get above 109, that's going to trigger a lot of buying, in my opinion. That's why 109 is so key. You can see I have an asterisk next to that, right? And unfortunately, we are still in a range. Let's go over to the dollar index really quick. Dollar index. Now, obviously, resistance comes in at 98.32. So I don't even have to. It's trend highs. Was previous double top. And I want to put in bullish, but I'm not going to. And the reason why I'm not going to do that is because if you look at the dollar for really over the last several months, I mean, we're just in a range. I mean, we are threatening a bullish breakout. That I don't disagree with. But to say that we're bullish here, that's a bit of a stretch, coming right into resistance. And look at relative strength. I mean, look at how divergent this is as we're coming in. Now, if we break those highs, it automatically turns bullish. We'll bust through this RSI trend line. We'll start going into overbought, but it will confirm a move higher if that happens. But I'm not quite there yet. I'm not quite on, there on, oh, we're super bullish. Now, look at these dips. We are not making lower lows. Not yet.
Yep.
But that support is at 98 for today. It's not significant, but it is support. Once we break 98, or I should say, if we break 98, then we start making, lower lows. Okay. So let's see what's next. Dollar MEX. Okay, let's take a look at the dollar Mexican peso. We have a minor triangle support here. I'm more concerned personally. And this, if you use ForexAnalytix, you know that I am long dollar Mexican peso, and I buy this on dips. I'm more concerned with this very long-term weekly trend line triangle support. That's why I'm playing it long off of these levels. But you'll notice that, dips, to 19 are being supported. And I think you have to watch today at 19. Well, any dip down here to like, I'm just going to write down 19 because I think any dip to 19 probably will pose you a decent buying opportunity for those of you looking to be long. We could still get down there. It's not like we can't. Resistance though are these highs right here, and this is from yesterday. But more importantly, is this little minor triangle. One of my colleagues in my office that trades a lot of these emerging market currencies. He trades the rand and the peso quite a bit. He was like, "Hey Blake, look at this triangle." I'm like, "Yeah, it's a big consolidation." That's why I was long dollar Mexican peso yesterday, and I sold it at 110 something yesterday because we were up against this resistance and I knew it was coming up. So anyway,
nice move above. If we break out, that would be a pretty nice move. Ascending triangle is a bullish formation, actually.
Yeah, I would think if we break above 113 or I'm sorry, 1913. Yeah, so 1913 would be a breakout, but we are unfortunately in a range. Now, this is obviously very indicative of summer. Summertime is, where we tend to be in a lot of ranges, and that's no different this summer. US dollar, Norwegian krona. Now, this is interesting. We came out of this triangle. We hit the 78% retracement 2 days in a row. Notice we respected that, 2 days in a row, knocked our head up against it. We are above resistance now. So the next level of resistance for the US dollar, Norwegian krona is here at 876. Okay.
Okay.
876. And then, and this is still, I'd like to say it's bullish coming out of this triangle, but frankly, we haven't really gone anywhere either. So now support should be very well supported back at the 618. This is the breakout point. We respected it, not overnight, but yesterday at 868, basically. I trade a lot of these Nordic currencies just so you guys know. I do trade them quite a bit. 860.
They're good technical markets, aren't they, Blake? Is that why you like them?
I do. Yeah. Yes, they are. They really are. They take a little bit of getting used to because the spreads, they seem wider, but the pip values are much smaller. So people get freaked out by the they're like, oh, look at the Swedish krona's got like a 25 pip spread. Yeah, but the pip value is a third of what you would normally have. So it's like having a euro dollar with like a 3 or 4 pip spread. It's not that big of a deal. So you just have to be directionally correct. that's
like everything,
right? Like everything. Yeah, exactly. So here is the high to low. Okay. Horizontal resistance, we're right up against that 955. I probably will have to write down like 956 here because we're right up against resistance. 956. And Coach, do we have any questions that have come in? Because I'm gonna wrap this up right now. Okay.
Yeah, so actually, you got something in the chat. If you could look over, and Deal would like to know if you could look at USD ZAR.
Yeah.
And Frederick wants to know if you could look at the Lira, USD Lira.
Yep.
So
okay.
Some exotics.
Sure. Let's take a look at, and I frankly, I've not been following the Turkish lira because it is extremely expensive for me to trade it through JP Morgan right now, and with the Turkish lira, the margin rates have gone through the roof. Retail may not be so bad, and I don't know since I don't use a retail platform, but via JP Morgan, I've had to stay away from the Turkish lira for the last couple months, and I haven't even put it back on my radar. And but let's take a look at the rand, and let's do this. Actually, let's go ahead and get rid of our all the technicals here, and so we can just kind of have a fresh slate. So First things first, I guess what I will identify with this, the Rand, here is on the daily chart, is where was that support that we came into that held? So first and foremost, okay, that wasn't even the 618 that held. But what I would be looking at right now is this actually looks like, since this move looks pretty impulsive, right? I'd probably be looking at this more like a flag pattern of some sort. So let's see what this, let's just take it from the low here. Basically a 38% retracement, and you can actually take this low here, it'll be a 38% retracement, you know, to the T. So I would have to say, regarding the Rand, as long as we stay above this level, you know, roughly, as long as we stay above this 14 level, I would err on the bullish side. I would say, you know, and plus we have some risk off right now. So having some risk off, the Rand is going to be more of a natural sell. Hold on, just reloading that chart. I'm not too sure what that was about, but we'll go back over to the Rand. Find it. Okay. So anyway, the way I would look at this Rand is I would think that this is, you know, just you would look at it as a bull flag pattern while it's above that support, and I wouldn't be bearish while we're above it. So you know, as long as we're above 14.14, you just, you know, I think you have to look at it like a flag. And like I said, with stocks weak, emerging market currencies tend to be weaker as well. So that's one of the reasons why the US dollar Mexican peso is obviously strengthening. So I'd be looking at this more of a bull flag pattern at this moment. Turkish lira,
Jacques is saying that USD ZAR has been downgraded. Lots of outflows regarding bonds there.
And you know,
because of the political situation there.
And Jack's also in our chat room. He is from South Africa, and he's been a fixture in our chat room for quite some time. So thank you for the comments, Jack. That's good to know.
And someone was asking about your asterisks. The asterisk on that chart means significant, powerful.
Yeah, and matter of fact, while you're looking at this, you might as well take a picture of it. This way you have
set your own up.
Yeah, at least you have them set up for today. We'll do this again tomorrow. We'll go through the same process tomorrow. Paul Franco will join us the last 15 minutes, but I'll still do this process with you guys tomorrow. So
you know, Blake, after listening to you today, I could see how you built up such a huge following on Morning Edge and continue to. I mean, it's really a great primer for the day.
Oh, well, thank you very much. I appreciate that. And, you know, and that's the key, right? You know, you're preparedness is everything.
You're such a Marine.
Thanks. So here's the lira, and you know what you'll notice is the lira is testing the 200-day moving average and the 618 retracement. The Turkish lira is obviously strong at the moment. That there has to be some sort of political reasoning why that's the case. And like I said, I have not been taking any notes that I see on the lira. I don't even really look at. I just kind of glance over and then I just continue on. But technically speaking, I think we're at some pretty key support here. So if you can trade it, I think the one thing I would be thinking at this point is if we start breaking lower, you probably have a good you know, possible move back to 540 here. I mean, and this is one of those situations that if you decide to short it, I think you can keep a fairly tight stop. Like, you know, I'll just give you an example. Is if you shorted it because of a breakdown, you probably put your stop back above like, you know, 560, like here, and then you know you're targeting down here at like 540. So I mean, it's a decent risk reward if you're shorting on a breakdown. Like I said, to me there's probably a reason why this is happening. But if we get a close below the 618 and a 200-day moving average, I mean, you know, you're increasing those odds that it's going to continue lower. So anyway, I hope that helps. And guys, remember, we're going to be a couple of things. I'm going to turn it over to Dale because he's bringing in his guest for the day. use ForexAnalytix and use these support and resistance levels, kind of how I've taught you today with the bias chart, and understanding you now you have a little bit of better understanding where some of these support and resistance levels come from. They are manually inputted by myself and the rest of the team to give you an idea where key levels reside in the market. So hopefully today's analysis has helped you out. Now, also, if you like what you saw here today, make sure you visit Forest Park FX. Forest Park FX will help you find a broker that's fitted to your specific needs. They are our sponsor for this webinar, which is free. But if you want to contact them, there's their Skype and email where you can get in touch with them. Remember, they are in line with your goals is to make money, because they're in line with you making money, because as long as you continue to make money, they will continue to thrive, and they're just matching you up with brokers that are going to best suited based on your trading style, which there are certain brokers that will be better for certain styles of trading that you have. So whether it's interest that you have to pay on margin, or your broker spreads, or the commissions that you might be paying. So finding the one that's right for you is important. So visit Forest Park FX. All right, Dale, it's all yours, man.
Okay, buddy. Thank you very much. We had a mix-up on the interview today. We don't have one, but tomorrow, Blake, our guest does credit you and acknowledge you for helping him become a good trader. And I've seen him trade. He is very good.
Oh, who's that?
So Clay at Ronin Forex Group.
Oh, great. Yeah, I know exactly who he is. So it'll be really, really great. And he's in our chat room from time to time. He comes in as Ronin, I believe. And
so
it'll be good to hear what he has to say.
So, so another one that you spawned. You got
awesome.
A big family of people that you've cloned. They can't be exactly you, but they have some of your DNA from hanging out with you, Blake.
well, I'm glad to have been a part of.
Lydia says the same thing. I don't know how many people I've talked to that acknowledge that you were important in their building a foundation for their trading.
Hey, Dale, I just got a notification on Twitter from your interview. It says I'm online now. It just came in just a second ago. Yeah.
Okay. All right. Let's see if he checks in. So, why don't you pass me the screen and I'll hang out for him.
I think you have to take the screen. I don't know if I can pass it to you. Can I?
I'll do it.
No, you have to take it. Yeah.
Got it.
All right, guys.
All right. See you, Blake.
Have a great one, and we'll see you guys tomorrow morning.
Okay. All right, Blake. So someone was asking about the VIX. So there it is. It looks pretty good to me. S&Ps are down 17 now. Okay, so, but insurance, if you're just speccing, that's one thing. But if you're, have a huge portfolio, you buy insurance hoping you don't collect. And this looks like we're putting in a pretty good week. Everything can change tomorrow, but I'm looking at this. Look how many successive higher lows we've had in the VIX. Okay, here's the bottom, and we've had successive new highs in the market, right? And even this new high in the market last week did not even take out this low. So subtly and quietly, like they say, markets bottom in silence and top with violence. I wouldn't be short the VIX. I hope that helps you.